Hi, welcome back to this course on working capital management. Now we're going to be looking at our last section to manage the working capital, which is going to be the cash management. That is quite a important thing for us to understand how the cash management is done. So let's look at it by starting to understand what is cash management and what are the key terms that we use in cash management. So motivation for holding the cash is really to maintain the transaction balance. Sometimes you need day-to-day needs of your business. You may have to have the water, electricity, and labor cost, and the printing and stationery, office expense, and also to maintain some things. And then you may need to have some precautionary balance, means a buffer stock from your average daily needs to understand to compensate for uncertainties associated with the cash flow. So we may have certain emergency requirements, you may have some accidents which you have to manage, you may have some emergency repairs to manage. So normally you have a average balance to maintain in your company, which is based on your average daily expenses from the past. So you have to have a trend of expenses, and then you add some buffer stock to maintain, okay, this is my extra stock to maintain the precautionary balance, what is going to be in case of any emergency use. So that is called precautionary balance. And then you have compensating balance, means sometimes the bank may have a requirement for to maintain some kind of minimum requirements in their checking account, in the normal saving account, or in the current account. So to in order to avail the corporate banking requirements, so you may have to have certain compensating balances. And then you have to have certain times. So basically in managing the cash, you have to understand what is your cash holding days. So how you get the cash holding days is cash balance divided by the average cash expenses plus the average supplier payments. So you are managing those things to your understanding, like just like the inventory and just like the receivables. You need to understand how long cash you are holding at this point of time. Is it too much or is it too less? So depending on the company policy, depending on the average industry, you can look at your competitors, you can look at your other similar companies in the industry to really understand, are they also maintaining that kind of cash, and what is the minimum requirement for you. What is your cash conversion cycle? So if your cash conversion cycle is, let's say, 10 days, then you want to keep your average daily cash expenses plus average supplier payments for 10 days. The rest after that, because you're going to get the cash anyways after your cash conversion cycle. Plus you need to make a cash budget in order to manage the cash. So the cash budget means every on a weekly basis or a monthly basis, how much cash you are going to generate from your credit sale, from your cash sale, from your supplier, from your collections, from any other loans that you may need, plus how you're going to pay that, the salaries and the rentals and the office expenses and the suppliers, how you are going to make. This way you will be able to understand, do you have extra cash or have shortage of the cash. So if you do it by week, then you will be able to understand and stretch it out and say, okay, I need the cash maybe in the 6 month or in the 3 months time or in 1 month time. How much do I need, so that you can arrange from your finances, or from delaying your supplier payments, or giving the cash discount to your customers, get the extra money in the faster. So this way you can manage the cash flow easily. If you have extra cash, you have to invest it. If you have shortage of cash, you have to borrow it. So that's how you really maintain the cash. There's no other secret about it. The cash, the compensating format is same as we prepare for the cash flow for financial statements. So you have that. It's very simple. You need to have your cash income first, cash from the sales, cash from collection from supplier, from customers, and then you have your expenses, your salary expense, your utility expense, your rental expense, your office day-to-day expense, plus your supplier payments. That will have your cash requirements. Net balance, you will say, is it plus or it's a minus. If it's a minus, you need to say where the money is going to come from. So you have to have a planning ahead of time. Can you delay the supplier payment? Can you prepone the collection from your customer? So this is how you really manage it. If you have extra cash, you invest it. If you have shortage, you borrow it. That's very simple. So there are certain money market options that you have to invest. In US, you have treasury bills, you have certificate of deposits in the bank. You can keep the money into the banks, and you can have a banker acceptance, or you can have repurchase agreements, and you may buy commercial papers, you may buy short-term tax exempt debt or other bills. So normally they are from 1 day to 10 days to 1 month or to 6 months. So this is how you have it. Usually they are quite flexible. So whenever you are choosing the mode of your investment, you need to make sure that you are able to sell it immediately. You don't have to be able to wait for 1 day, 2 day, or 10 day of credit to be able to get the money back. So that's how you will invest the money in. That's all about the cash flow and working capital management. Thank you very much for taking this course. If you have any concerns or any questions, you can always write back to me, and then I will come back to you. Thank you very much.